Hi, I'm Pete Andresen with Andresen and Associates. We're fee-only investment advisors in Salinas, California. And I wanted to give my clients a bit of an update. You have seen the news, you've seen the media. It's going to be, there's no way around it. It's been a tough year. It hasn't been as bad as 2008, but it's been tough. And the media are shaking this thing like a pit bulldog shakes a rat because they sell fear. Behind me is a bookcase mostly loaded and full of history, and it's worth pondering that history a little bit as we look at this. Right now, the S&P 500 is down about 25%. That means one out of every $4 that started the year in the S&P 500 is gone. The NASDAQ, that's technology, is down about 30+%. Europe is down about 30+%. The big thing that happened to me in this quarter was the bond market, because as I said in earlier videos, investors were not taking the Fed seriously. They thought the Fed was going to crack, and now fear has started to creep in. We saw that bond collapse basically in the English government bonds last week. Fear is entering in, and that's a good thing for several reasons. The first is that it's going to make the Federal Reserve's job easier, because it's going to make people pay attention. They're not going to keep bouncing back every time they think that the Federal Reserve might decide to softball it. The other thing is it's going to create bargains for us, and what we've been waiting for are those panic-driven bargains. The difference for me this year is that our bond funds, Andresen Associates portfolios are down less than those stock market indices because we're not entirely in the stock market, we're diversified. But those bond funds, I look at our government, short-term government fund, it's down 11%. That's going to recover because you just hold a bond to maturity and it'll recover. Also, the more aggressive corporate bond funds are down. The Schwab aggregate bond index fund is down about 14%. That's really different, because usually I can show a client bonds going up when the stock market goes down, but not this time. So we've taken some losses, and those will be short-term losses, because all that history in the background is going to tell us what happens next. And what happens next is we'll get through this. It's going to take some courage. It's going to take some persistence, but those bargains are emerging. I just checked Swiss Helvetia Fund, one of my favorite European proxies. It's down 30-something%. So the bargains are emerging, and I'm going to cautiously buy. If as is incredibly possible, the financial markets keep going down in the fourth quarter, I'll buy more. I'm going to be buying cautiously because I don't really know what's going to happen. But these bargains are going to pay off in coming years. It's extremely likely that whatever we buy at this point, it's not a sure thing at all, but it's extremely likely that whatever we buy now will produce substantial and attractive gains in 5 years, especially if we buy carefully. So you're going to see me tilting more towards longer durations, with the expectation that the interest rate increases will not continue forever. I'm going to stretch duration out a little bit on the bond funds. I'm going to go towards government bonds because we're looking at a possible recession, and you're already seeing me buy international. So most of all, now is going to be an epic time of bargains, but it's going to require courage. Just like all that history behind me discusses in depth. It's going to require courage, and we're going to have to kind of ignore that media, which is going to be the professional whalers are going to be out big time for the rest of the year. More later. I just wanted to give you a heads up. Meanwhile, the best of life continues in the worst of times. Enjoy, savor this life, savor this weekend. Blessings.